It's going to get worse. Why?
Well, thank you so much for having me on. And I think you just mentioned a lot of the statistics, pending home sales, existing home sales, housing starts, that we do think are poised to get worse in the year ahead. When we talk about our housing view, we characterize it as a bifurcated view where housing activity, so sales and starts, is poised to fall further and has a fair amount of room to fall, whereas home prices, we think, are a lot more protected here. It doesn't mean that year-over-year home price growth stays positive, but it does mean that it stays a lot more protected than the drops we see in housing activity.
Why is that? Explain that to me and explain the relationship between those prices and interest rates. In other words, I'm guessing that if interest rates are going up, prices can't go up quite as much as they would when interest rates are lower.
Well, I do think that affordability does play a pretty big role here. When we think about affordability, and some of the inputs there are going to be prices, mortgage rates, as you're mentioning, incomes, affordability has deteriorated more over the past 12 months than any 12-month period that we really have on record. And we have confidence in that data back to the mid-1980s. But if we think about the follow-up question there, it's whose affordability just deteriorated? Current homeowners, in our view, an overwhelming majority of them have 30-year fixed-rate mortgages. Most of them were able to purchase their home or refinance their mortgage in 2020, 2021, when rates were a whole lot lower. We think their affordability is in a very good place. That affordability deterioration is for first-time home buyers, prospective home buyers who are going to have trouble stepping into this market. If we think about what that means for existing homeowners, they're just going to be a lot less likely to list their home for sale. Moving becomes prohibitively expensive.
Yes.
They have to take out a much larger mortgage.
Why would you move if you've got a 3% mortgage to a house that's probably equally priced to yours or maybe higher and pay a higher mortgage rate, unless you have all cash, which some people do, not me.
I mean, exactly. And if you think about how that flows through to sales, if I'm not listing my home for sale, then I'm also not buying a home after I sell that home. So that kind of exacerbates the drop. We have sales falling to their lowest levels since 2013. If we index the affordability deterioration this time around to what we saw during the Great Financial Crisis, sales are actually falling faster this time. And we think that that continues through the middle of next year. But on the other side of this coin, if those homes aren't being listed for sale and existing inventories are close to their lows of the past 40 years, that's as far back as we're comfortable with that data, if those homes aren't being listed for sale, if they aren't being sold, then home prices are a lot more protected. Months of inventory are only at about 4 right now, which is a pretty healthy market from that perspective. We think that the quality of mortgage underwriting has remained very robust. Lending standards have actually tightened since the beginning of COVID. So we think that the risk of distress, kind of defaults and foreclosures that exaggerate the drop in home prices, we think that's also pretty contained this time around. So we think home prices fall next year. They fall about 4%.